Invest Africa, proudly brought to you by KPMG.
Welcome back. Still with me, my guest, Margaret Dawes, the Sanlam Emerging Markets Executive Director in Africa, Tavaziva Madzinga, CEO of Old Mutual Africa, Samie CEO at Line of Africa, and in Lagos, we're still joined by Yomi Onifade, Divisional Director for Retail Business at Mansard Insurance. Again, welcome back. Yomi, let's come to you first, and I perhaps would like you to give us just a brief overview of how leveraging of technology in the game that of innovation, how is that changing insurance in Nigeria, if at all?
In terms of leveraging on technology, it's still early days yet, but the Nigerian environment has one major advantage, which has been the massive growth in the telecoms industry over the last decade. So in terms of tele-density, we now have one of the highest rates, and this now gives us the ability to reach out to customers in fairly remote areas. So the regulators recently released guidelines on microinsurance, for example. Mobile money has been in the market, although it's not been as successful over here as we've seen in, say, like Kenya or other East African countries. But the potential is there in terms of being able to create access to customers, especially in the lower income segments, and being able to distribute products and services to them at minimal costs to the business, which makes it efficient. Of course, this all have challenges in terms of the lack of data for adequate research, in which case you're able to then go back to the drawing board to develop products and services that the customers really need. So the ability of being able to even gather the relevant data to be able to leverage on technology to put the products that they really do appreciate on the market is another issue entirely. But definitely the potentials around the telecom industry, the banks are also leveraging on this, so the entire financial services industry has the potential to gain significantly from the growth of the telco industry. We're also experiencing significant growth in the data side of the telecom industry, which has the potential to also help in terms of distribution of insurance.
I want to pick up on the point that you've made, Yomi, and that was particularly around microinsurance. And from what Yomi says, it sounds as if that there are some key variables that need to be in place for microinsurance to take off, and maybe one of them is telecommunications infrastructure and the like. And Tava, I see you nodding, and perhaps you can talk to us about, where have you found in your African footprint that microinsurance has taken off most, and why do you think that in that particular geography it's done so?
Okay, thanks, Nozi. I think traditionally insurance has focused on the formal market. So when you talk about brokers and your traditional agency forces, that's been a huge play in the formal sector, and you can see insurance penetration remains low. I think a huge part of the market that hasn't been focused on is really in the informal sector, and that's where, as Yomi put it, microinsurance starts to come in. But then when you start to think about the challenges in terms of accessing that market, then we start to talk, as Margaret pointed out, around how do we use technology to then access that market.
What is your experience? Maybe ask Adam first before I come back to you, Margaret. What has your experience been of East Africa in particular? I think in this conversation we're sort of doing a dance between the southern tip and the west bit of Africa, but let's bring East Africa into the conversation.
Okay, I think what we're doing here is we're addressing a particular market segment. In the emerging market segment, where we're talking about microinsurance and so on, the needs in East Africa are actually little different to what's happening in South Africa itself, and indeed every emerging economy around the world. So there's a huge amount of research and product development that's going on, and some work better in some segments than in others. The challenge in South Africa is not or in Africa is not product delivery. It's service delivery. How do we access the client in a meaningful way that allows us to get our product across and therefore be able to provide services into that segment, and in return for receipt of premiums and the levels at which we do that. There's a lot of research going on in terms of how we can use telephony, particularly mobile telephony, because the penetration of that is so widespread. One of the key challenges we have, though, is financial literacy and the understanding of consumer education, of the kind of products and so on, and services that could be made available to them. And it's still very nascent, both in South Africa and in Africa, and it needs quite a lot of government intervention and support, I think. It is doubtful, to my mind in any case, that any one insurance company could make meaningful inroads into that sector by themselves. I think it's a broader effort, and I think, touching on an earlier point you made before the break, it really is the point, I think, where insurance interests across Africa can converge in terms of how we provide these services to the mass of our communities out there.
Margaret, would you concur that mobile technology is the answer for convergence that Adam speaks about? I want to throw that element of the question to you, but then I want you to take on a second question, because I want to change our focus very quickly to the growth of retail on the continent and how the insurance industry is responding to that. But let's first take on the mobile technology.
We have been selling insurance products using mobile technology for about the last 18 months or so. We distribute via mobile technology in Zambia, in Malawi, in Kenya, and in Nigeria. The uptake has been very good, very promising. We think there's huge potential. We've started with basic products, and we think that that gives us a platform from which to upsell to clients. So, and it is a relatively cheap way of distribution. So we're very optimistic about that line.
I'm going to, because we've got 3 minutes left, I'm going to go back to Lagos and I'm going to ask Yomi to come in with his final comments. But Yomi, I want you to talk to us about the industry's response to retail and the rapid growth of the retail industry from your perspective.
The increased capitalization over the last couple of years has enabled quite a number of companies, such as ours, to be able to invest a bit more in the retail market space. Essentially, we have an institutional market space that is largely saturated. So the major growth areas we've seen over the last couple of years has been in the retail market space. And this has been helped by the improved appreciation of insurance, the improvement in living standards, the growth of the middle income segment has helped to drive the retail market space. If we compare what the entire insurance industry has done up until now in terms of penetration, and we do a rough estimate of what can potentially happen if you if you're able to crack the retail problem, the industry can literally quadruple within the next 2 to 3 years.
Yomi,
So
I'm going to hold you on that point. The industry could possibly quadruple in the next 2 to 3 years. Very quickly, Tava, in 30 seconds, your forecast for the industry looking forward. He says quadruple in 2 to 3 years. Your views?
I think certainly very positive. I think to say quadruple, in my view, is certainly a conservative view. I think if we look at the stats that are coming through from the informal sector, I think a huge amount of that is really untapped and really ununderstood.
What's bigger than quadruple, Adam? Because I'm going to give you that quantum. So what are your forecasts?
Well, I think the potential is exponential. I think it's very difficult to put that on. Whether we can deliver, the challenge is to deliver the potential into real value, in both value to the industry, but also value to our customers.